It is time once again for the weekly candles. Let's get into Bitcoin as well as our favorite Bitcoin miners, which has been a growing list of late. And let's see how their weekly candles compare right now. So first, we're going to start with Bitcoin. Bitcoin is actually in a little bit of a scary spot right here. You can see we got into the upper end of the Fib Bollinger Bands. Now, I'm not going to look at this for every single one of these charts, just for Bitcoin, because it is in this cloud and it is coming out of it right now, which is a little bit scary. Now, there are some good things on this chart. Volume's not one of them, though. It did come red on here, but we have seen it go red a little bit, like from here to here, and then go right back up again. So we'll see what's going to happen there. Now, something that is interesting, we did do a 50 retracement on the RSI, just like we did before, right? Back here where we got to it on May 6th, that week, we got to the 50 retracement from being overbought, and then we went back up again. We are currently at that area. We are at the 50 area on the 50 RSI. Well, we're just below it, but we could come back up at least to this yellow line here at 65 on the RSI for the weekly, which would be a bounce. We are currently on the 20-week SMA, and we stopped there. As long as we don't go below this thing, we could go back up again, and we could go as high as, pretty easily go as high as 81,000 on this thing without a lot of difficulty. Now, once we get to that 81,000, we will need to easily come back down to 70,000 once we hit that to go any higher from there, but that's that. Now, the scary part. This is the scary part right here. This area right here that we're looking at right now could be a double top. And if that is a double top, let me hide all my drawings again. If that ends up being a double top, that would be if we got below $60,000, right? I'm going to ignore this wick right here. I'm going to call it at 60. If we close below $60,000, I'm looking for a minimum move down to 52,000, maximum move down to about $45,000. And that would be a full move of this double top here, which we've seen in the past. Like this was a double top back here. Midline was at 31,000. As soon as we got below 31,000, guess where we went? We went all the way back to just above the top of that area here at 13,000. Where did we end up? Yeah, we ended up at this area here of resistance, at 16,000 all the way back before. There is a very good chance we come back down to this $44,000 area for going on a big epic run here, or this could be the final resting place for the bear market once the crypto winter returns in 2026. We'll have to see, but for now, that is the ultimate bottom is 45,000. The mid bottom area where we could turn around is 52,000, or if we turn around right now, bounce off the 20-week moving average, take out the previous all-time highs, we could just run higher from there. So we're in a kind of precarious spot right now. Bitcoin is not giving us clear signals at this time. But as long as it is above the 20-week moving average, I am expecting it to continue to go up. If it closes beneath the 20-week moving average, which is the yellow line here, let me make sure that is in fact the 20-week and not like 13 or 15 or something I've meddled with. It is the 20. If we break that 20-week moving average, I don't see us stopping till we get down to $52,000 on Bitcoin. So keep an eye on that. This is a mission critical zone right now for Bitcoin. Let's move on to Bitfarms. How's Bitfarms looking this week? This is the weekly candle, and that is an ugly candle. I don't like that candle. That is a very toppy looking candle. Now, RSI is at 75, so it is slightly overbought. Volume is still trending upward, but if it goes flat and starts to curl over, I would not be surprised to see us come back down to about $2.50, $2.54, come back to the 200-week moving average and use that as support before we move on up further from here. Now, of course, that is not even a 50-cent move down from where we are, but on a $3 stock, that is a significant percentage move. Let's see what that percentage move would be from where we currently are. If we went down to the 200-day moving average, that would be a drop of 13%. Now, we've seen bigger drops than that and bigger gains than that, but I don't like this weekly candle. I actually hate it. Ignore that little green arrow there. That means nothing when there's such a big blow off top on there. And if we do know something about blow off tops here, as you can see on the left here, which one, February 26th, that was one. December 26th, that was one. And here, this isn't as dramatic, so I don't necessarily think it's going to come flying down. But look what it did before, right? It came down to the 200, went just below it, came up. And then it did it a second time, right? It went up big in a big way, came down, sliced through the 200-day, went all the way to the 50-week. Sorry, not the 200-day, the 200-week, and then went all the way down to the 50-week. Now, if the 200 doesn't hold us, we do have the 20 below us. They'll pick us up at 236. Otherwise, we could be all the way back down to $2. I don't necessarily think that is likely to happen here. I do think we'll bounce off the 200-week at 254, but I am looking at us to come down in the next 2 weeks and go to the 200-week moving average on Bit Farms. I don't like this week's candle. This week's candle was super, super ugly here at the end with that big old wick on top. Hammers at the top of the range are no good. Don't like that. So I'm not enjoying that at all right there. Okay, especially since it's near the bottom. Don't like that. All right, let's move on to CleanSpark. How's CleanSpark? CleanSpark also has an incredibly ugly candle here. I don't like this one whatsoever. Let me turn off. So we are right on the 20-week moving average, right? We're right on the 20-week moving average. We move any lower and close, I'm looking at us coming all the way back down to like $14, maybe even as low as $13. I could see that happening if we close at all. If next week is below the 20-week moving average, if we do not move up next week on CleanSpark, I could absolutely see us coming quickly to 15, potentially even as low as 14 or even $13 on CleanSpark next week. This is a very ugly candle. Let me turn off this. Yeah, see how that big long wick, little red body at the bottom. This is not really the bottom of the move. We're in the middle of the move. Seeing a candle like that could have been a lot of dilution coming through now. That could have been dilution coming through. And we do have volume curling up. So if you look at the volume oscillator down here, it is moving up. Volume is moving up. We're sitting on the 20-week moving average, which is support. We are above 50 on the weekly RSI, but we are interacting with the signal line for the RSI here right now, and we are kind of following it down. We do need to get above this yellow signal line in order to call it to go up. So CleanSpark has an ugly candle, but I don't necessarily think CleanSpark is going to go down from here. If it does, though, if we lose the 20-week, then I'd be looking at us coming down to $14, $13 if we lose the 20-week moving average. If we can hold above it, I can see us closing back above $18 and maybe even holding this move for once this dilution is finally done, especially with all of the tailwinds we're getting out of the production in terms of getting new facilities, new deals. Lots of stuff is happening at CleanSpark right now. I think they're gearing up for something big, and I think people are going to love it when it comes out. So I'm not necessarily bearish on CleanSpark, but I do think it could come down to about $14 sometime soon off of this really just disgusting candle. Now that if volume picks up, if they come out with good news, if Bitcoin goes up, if any of that stuff happens, yeah, I could see this being the absolute support area because we did grind down into it and we've been using it as support. So this might be the floor right here. But if we lose the 20-week moving average, just like with Bitcoin, we're going to come down. So watch the 20-week moving average on CleanSpark for clues. Okay, Mara. Mara is doing another thing too. Mara isn't as bad. It's a doji. Mara is doing a doji. Now it is leaning towards the bottom of the candle, but look at that tiny little sliver of a body. We were actually down 1.34% on the week. We have a wick on top and a smaller wick on bottom. We are holding above the 200-week moving average, and we are stuck and have been stuck in between the 20-week and the 200-week moving average here for about 3, almost 4 weeks. We must get above $20.76 and hold above $20.76 to see any significant moves on Mara. This is ugly. It is a descending channel that we've been seeing since May, since late May. And if we get above this stupid 20-week moving average, if we get above that thing, we are easily opening up into the high 20s, low 30s. We might even get into the mid 30s once we break that 20-week moving average. I don't think we'll go much lower. So if we lose the 200-week moving average, honestly, the lowest we're likely to go is 1683, maybe $17 might be where the 50-week catches us before we start going back up again. So we really have limited downside on Mara. Honestly, the upside on Mara is significantly outweighs the downside right now on Mara, in my opinion. And of course, none of this is financial advice or a suggestion to buy, sell, or hold any asset whatsoever. Just my thoughts on the charts when I look at this. So Mara, while you would look at that and go, oh, it's just like the others. It's got a nice big wick on top and a tiny little body, like closer to the bottom than the top. But no, it's more of a doji. This is more of a doji. Like if it was like this, I would have been a little happier, like a hammer, because this is kind of the bottom of that move. But this is a doji. It's indecision. Mara can't decide what it's going to do. It needs to conquer the 20-week moving average at that 2076. Is that what I said? Yeah, 2078. It's got to get over 2078 and hold. And it must hold above 1889, but not to worry, we could easily be caught at about $17 for support on Mara if it does lose the 200-week moving average. I'm not too scared of it doing that right now. But what I really want to see is it take the 20-week moving average, and from there, we are just opened up to the sky on Mara. All right, so moving on to Riot. Riot's just trading completely flat since April 29th. This thing is just the flatness of all crypto miners right now, just doing a whole lot of nothing. Now, with that said, when Bitcoin miners do a whole lot of nothing, just like they did back here, remember in August 2022, and they did a pretty big dip to scare everybody, and then came up, did a whole bunch of nothing, and then launched. Yeah, they tend to launch when they do nothing for a while. So keep your eyes on this. I mean, this thing did nothing basically from April 17th in 2023 until June 26th in 2023. And then in 2 weeks, it did a move of 74%. And we are coming up on that week. Next week is actually, so this was April 17th to June 26th. What, April, let's say April 29th is 29th-ish, April 22nd-ish. Until when? Oh, June 17th. Next week is next week is June 24th. Oh, it's the same 2-week period from last year where this thing absolutely ripped. So we're going to be watching that really close for Riot, and if it does a 74% move like it did last time, we'll be looking at $16.74, which would be the 200-week moving average. So I actually like where Riot is right now. I mean, this is an ugly candle, but Riot's been flat for a while, and when Riot is flat for a while, it tends to absolutely explode after that. So I'm actually kind of bullish on Riot despite this super ugly candle. Volume's been flat. RSI's been flat. This thing is just waiting dormantly to just blast out of this space. So keep your eyes on it. If price gets above the 50-week moving average at 1234, this thing is going to quickly go up to the 200-week moving average at $16.29. So keep your eyes on this level. The 50-week moving average is the line in the sand we need to conquer, and then Riot is absolutely taking off, and it could do that in a day. Honestly, it could do it in a few hours. So you're going to want to watch Riot. Have some notifications for yourself on Riot in the next 2 weeks, because this is the 2-week period last year where this thing absolutely took off into the stratosphere. So let's keep an eye. Now it might be pushed off another week or two from where we currently are right now, or maybe you could argue and say it happened in February instead of July this year, but I'm watching it. All right, Bit Digital. Moving on to Bit Digital. Bit Digital also has been having kind of ugly candles for about 4 weeks now, 5 weeks, 6 weeks. Well, now we had this hammer at the bottom, this inverted hammer, which was really nice and took us all the way up to almost $3, $2.94. But as you can see, every single candle since has had a huge wick on top. That scares me. I don't like that. Now it has been using the 20-week as support, which right now would be about $2.50. I do think that will probably hold for now, but if we lose that, if we lose 250, we're coming down to like 220, maybe even $2 on Bit Digital. So keep your eyes on that. I don't like the big wicks on top on it. I'm watching it. I do have a significant bag of this, but RSI is in a good place. And the signal line is at 47. So we could bounce off of that if we came down, which would honestly would catch us at 250, which is the 20-week moving average right now. It would catch us there. Very likely catch us there. Now volume is starting to go flat. I don't like that. We would need to see volume come up. Now we have seen volume in the past. We have seen it in the past back here in February 2023. Let me pull this down, where it came down a little bit for a couple of weeks, and it was a what? It was a 36% drop. But then after that 36% drop, we were up. Now let's say you bought in before the 36% drop. We were up after that 36% drop until it went all the way up to 200% from that 36% drop. So, I mean, I'm not super scared of that. Volume came down, right? It did a mound like it's doing right now, came down a little bit, and then just took off up. So we could see a dip here. We could see a dip. We might 250, maybe 220 or $2 is where we would find ourselves at a base on Bit Digital, but then we'd be going up quickly after that. The 50-week moving average. Now, if we close above this thing, which is currently only at $2.72, which is less than 10 cents above where we currently are. If we can close above that 50-week moving average next week, 273, I would be looking for this thing to start going quickly up towards the 200-week moving average, which is right now at $5.22. So Bit Digital has not a lot of downside. Like the downside risk is down to $2. It's like 64 cents from where it is. The upside is $5.50, over 100% up from where we currently are. So yeah, I mean, risk reward is looking really good on Bit Digital right now, even if it were to drop another 50 cents. So I'm liking Bit Digital where it is right now. And as you notice, just like with Riot, when it's kind of not doing a lot, like right now, it hasn't really been doing a lot since January. Bit Digital hasn't. And it didn't get a March run like so many others. So when Bit Digital does nothing for a while, like I mean, honestly, all of summer 2023, uh, all of 2022, and then when it does finally get tired of doing nothing, it does a whole lot of something, going up to the 200-week moving average and sometimes beyond. So we'll keep your eyes on Bit Digital for that. It's another one that seems to be dormant. Iren, let's take a look at Iren on the weekly. It is way above all the moving averages. It is getting a bit toppy here with these wicks on top. I am looking for Iren to come back to the 5-week moving average, which is currently at $10.21, 25 cents. I would like to see it actually come down more to $8.35, which would be the tops of the bodies on here and close to the top of the wicks from the previous move last July. I would want to see it do that before I'd be like super convinced it's going to start moving up again. And by the time it did that, it probably would contact the 20-week moving average, which in my opinion is a pretty good level of support if you're in a bull run. 50-week even better, but I mean, if it were to get there to be down, you would lose more than half. I don't think it's going to do that, but I mean, it could do that. But the weekly candles aren't great. We are overbought on the R side in a big way. We're at 90 on the R side. The volume is finally starting to look like it might go flat next week. I do want to see it come back down to the 5-week moving average or near the bottom of this big body candle here that was 25.5% up, which was the June 10 candle. I would want to see it come back down to at least $10.30 on Iren before I'd be interested in this thing. And I do think that that could happen in like a 2-week period here. I do think that the non-hodl crew is front running the hodl crew right now on the Bitcoin mining sector, as all of the non-hodls have been running while the hodl crew has been either flat or dropping or just kind of doing a whole lot of nothing. So I am looking for Iren to come back down to this area here before getting back into it or getting into it in the first place for me. We're also going to look at Corz. Corz, it had a minus 13% candle last week. I did mention a couple of times that last week that I thought that this was looking toppy, and it is looking toppy. Now, look, there is some support at 831. I like that. So, and that also coincides with the top of the wick here from this June 3rd candle. So around that 830, 840 range, like if it comes down another 50 cents, I might be interested in Corz. I might be interested in Corz at about 850. Now, I personally, I'm not going to buy Corz. Now that is a personal decision. You don't need to agree with it. That's fine. And that's just how it is. Like it's my portfolio. I do what I want with it. You do what you want with yours. On a 2-day level though, this doesn't look bad. Honestly, 830 my 833-ish area might have been the bottom on this. This is on the 2-day, it is printing a hammer candle on the bottom of that move. So this could have been the area to scoop it up. Now let's take a look on the 3-day real quick. All right, yeah, 3 days of doji, not really all that interesting. Okay. On the weekly, let's go back to the weekly. So we are overbought on the weekly. Volume is flat. I do think we will revisit 833. I do think we'll revisit about that 833, 830 range. I do think we'll do it in a couple of days. On the daily chart, yeah. So we might come up to like 939 first and then come back down to 830, maybe slightly below that, but I do think we'll hit the 20-day moving average before we start seeing another big move up on Corz again. If you're in Corz, congratulations though, man. You've been enjoying a huge run up since May, just in a month. Like, what did you gain in less than a month? In just a month, it was 250% in a month. Yeah. I hope you locked in some of those profits. It was like that's amazing. Now we're at 76 on the 2-day RSI. That is a hammer candle. I do like it. I think we might see some flatness out of this thing, maybe come back down to the 830 area and then kind of start curling back up again. If we lose this 830 though, if we lose 830, like let's say price comes back up to like 950, 960, maybe even $10, right? And then comes back down and we lose 830, then we're looking at a double top. And the double top, the bottom of this double top is honestly all the way down at 537. So that'd be scary. So look for that. We're looking for it to hold over 830 or get above 1069 for Corz to be like confident. All right, let's take a look at Cifr. Cifr's been just grinding up here since December. Just a consistent up move. It's been holding on to this trend line right here. Watch, all these drawings are about to pop in. Yep. Yeah, it's been holding on to that trend line, which is the 50. It's the 50-week moving average. It's just been holding it real strong here since December. That's really good. I like that a lot. I mean, the 50-week, it didn't cross it until what, March, but it's been holding us up. It's been holding us up real strong. So I do think that this is a blow off top candle for Cifr. I think Cifr is likely to come down to the 20-week moving average at $4. It might even come back to the 50-week at 352. So anywhere between $4 and 350, I'd be looking to pick up more Cifr. Complete transparency, I did buy some Cifr on Friday on that 14% dip. I bought a little bit there because I was like 14% one day. I don't know, it might go a little lower, but like it also has a lot of upside move here. I mean, because it can go easily as high again as $6, and I was picking it up at 450, and that's a $1.50 gain. Or if it comes down, the lowest I see it coming down is about $1. So the risk is $1, the gain could be $1.50 per share. That's not a bad. It's not the best risk reward, but it's not bad. I'm not too concerned about that, but I do think this is a blow off top signal similar to what we got here on March 25th and December 26th. And with those, we did see it come back down to the 50-day moving average. So I am looking forward to come close to the 50-week moving average, which I think it will catch it around the maybe 350 range. I think it'll catch it at about 350-ish, or honestly above 350. Sorry, above 350. I think it'll catch it at the 360 range. So between $4 and 360 is where I see Cifr catching a bottom and then curling back again. All right, let's take a look at Wulf. Wulf, where's the Wulf pack? All right, so that's a blow off top. Sorry, that's a blow off top. That's just what that is. That's what I'm looking here. Wulf is looking very toppy. This is the exact same candle from December 26th. Look at that candle on December 26th. It's right here on the left part of my screen. Let me put it in the center. Right there in the center. That is the exact same candle. Now, the week after we opened up, how much did it open up the week after? It opened up 22%. So not quite to the top of the wick. Where would we be right now if we opened up 22%? So we could open next week or go as high next week as $5 on Wulf. But if price at all comes below $3.89, I'm looking for a quick return to the 5-week moving average at $3, maybe even all the way down to $2.40 at the 20-week moving average. This is the exact same candle. That was a blow off top. As this candle, that is a blow off top. I am looking for price to maybe open up on Monday, up around like the upper end of $4. And then if it starts coming down hard and fast, it's a blow off top. Now let's take a look at the 1 day here for that December 26th week. Okay, yeah. So this was Thursday, Friday, Tuesday, yeah. Oh yeah, we didn't have that. Okay, anyways, yeah, it opened up and immediately came down. If you see any kind of pattern, even somewhat similar at all to this right here, from December 29th and January 2nd, if you see any kind of candle action like that going into this coming week on Wulf, we know that it is going to come all the way down to at least the 5-week moving average or the 20-day moving average, which is going to catch it at about $3.20, that area. So that is a warning. Now, it doesn't mean it's going to happen. Doesn't mean it's going to happen. There are no hard rules that it absolutely must do that. But if you see price plummet on Monday, like even if it opens up, if it just immediately starts plummeting, if price goes beneath the body of last week's candle at 387, if it does that, let me put my white line right there, 387, it goes below that, we're coming to the 5-week moving average, which will catch us somewhere about 310, 320-ish probably on this chart. So that is the warning of the week. Anyways, with that said, please like, comment, subscribe, share this video, and have a profitable day.